Dividend investors, bonjour. This is Mikey Hu, founder of Dividend Stocks Rocks and passionate investor. Welcome to this daily update on the market. I call it the Dividend Uncut Report because I do that without anything, and I want to make sure that your dividend don't get caught. Today we're going to have another bad day on the market. Futures are down, so don't expect to make any money today. It's all right. It's normal. First, I want to thank you. I want to really thank you because I'm receiving lots of emails, lots of new followers on YouTube. If you haven't done it so far, just click on the subscribe button. What it does is you're going to receive an email notification as soon as I publish another video. I do that daily. I publish them right before the market opens. So you'll hear me talk every day, but if you want to make sure that you don't miss a video, just subscribe and then we'll be together every morning. I want to also say hi to everybody right now at National Bank. I've been working there for 13 years before I decided to retire from the corporate world, and I know how it could be difficult to work in a bank. And actually today we're talking about banks, so a big shout out to my old colleagues. Keep calling your clients, listen to them. Don't let them panic, because panic is easy these days, right? We hear people saying, oh, it's going to go down 50% or it's going to go down 90% and then you're going to lose it all. Well, you know what? It's the end of capitalism. It's the end of this society and we're all going to die. Or maybe not, right? I heard those stories many times, and you know what? The day that those people will be right, cash won't save you. Gold won't save you. What you will need is a dog and a shotgun. I don't think we're going to get there anytime soon. The actions from the Fed yesterday clearly prove that they are there to make sure that the system keeps running. What they announce is more quantitative easings. Long story short, what they do is that they put money in the market to make sure that the market remains liquid, to make sure that we can keep making transactions, and they want to show the world that central banks are there to take action. Right now, what's going to happen is I could talk about banks for probably much more than an hour because it's a very complex situation for them. I'm going to try to break it down into a few points and stay within 10 minutes, so stick with me. Obviously, I'm going to talk more about Canadian banks than US. I've been working in that industry. I know this industry inside out. I was working at the bank during the 2008 financial crisis, so I lived it through before, during, and after. So the first thing is interest rates are going down, right? Both Canada and the US. The impact for banks is they're basically making money between the spread between what they pay into deposit and what they receive from mortgage or loans interest rates, right? So we call it the interest rate margin spread. The problem is obviously if you drop down the interest, well, there's not much room for a good margin. So they will have to operate with very, very thin margin, as they did back in 2009 once the rates were down to zero. So we're back there again. So it's going to be difficult for banks to manage, but they're still going to make money out of it, that's for sure. But it will be difficult. Second thing, they will have to deal with bankruptcies. We don't know exactly how it's going to be done so far. Obviously, by applying social distancing, by staying home, not spending, and there's a lot of businesses that are closed because they're non-essential, or they cannot simply work if people don't come into their store. So mostly retailers, entertainment businesses. This will be restaurant, bars, gyms. It will be very, very difficult for them. And some of them obviously will go bankrupt. So the bank will have to take that also. And finally, the oil industry is plummeting. They obviously work with lots of loans in North America. That's the whole idea from Saudi Arabia, to pull down the oil market to a strictly low level, to kind of like kill the competition. So obviously bank will have to grab some of that as well. So there is a lot of weight on their shoulders right now, and everybody's saying, well, maybe we should be worried about that. We should not. And I'm going to tell you why. Banks in our system in capitalism is the heart of the economic body. It's literally the heart because it allows everybody to get blood and fresh air. So this is where money flows, comes and goes. So if you stop the bank, nothing is working, literally nothing. As I mentioned before, cash and gold won't save you. If banks don't exist, well, you know what? Cash won't worth much, and I don't think an ounce of gold can feed your family. Food can feed your family, right? But let's not get there. Let's focus on the fact that banks are the heart of of our system. What happened in 2008, 2009? All central banks made sure that the banks kept rolling, that they kept at their business activities. Already, the Fed and the Bank of Canada are backing banks up. They're already saying, you know what, we're going to buy back bonds. We're going to do this. We're going to inject money. We're going to make sure that there's a package for people so they don't go bankrupt. And you know what Canadian banks did yesterday night? The six big banks that we're talking about, Royal Bank, National Bank, I know National Banks always come first, but there's the six banks, sorry. Royal Bank, TD Bank, Bank of Nova Scotia, BMO, CIBC, and National Bank. And Desjardins, if you're a fellow Quebecers like me, they all said, you know what? We're going to put extra measures for people that cannot meet their financial obligation. So call us. Make sure that you take an arrangement, but we're not going to possess your house. And that, keeping that in mind, banks are not interested in your house. They're not interested in your business. They don't want it. If they have to, they will take it back. But seriously, that's the last thing that they want to do. So what they will do instead is try to accommodate you in another way. Make pause on your payment, extend your payment, like change the structure or whatever to make sure that you can still meet your financial obligation. I mean, keep in mind that right now, the half of the earth hasn't been scorched off, right? We haven't burned the entire population or something like that. This virus is coming. It's hitting us in North America. And some people are saying, oh, it's coming. No, it already happened. We just don't know yet because it takes time to have stats. But please read the article below. I know it's like 50 pages. It's like 45 minutes long. Read the article that I put in the comment section. It explains you that what we see now already happened 2 weeks ago. It's already there, but there's an end to it. It's a virus. We're going to get through the virus. And once we resume, well, people will go back to restaurant. People will buy sports and goods and apparels and life will go on. Yes, unemployment rate will go up to 20, maybe 25% during the crisis. That totally makes sense because all businesses are closed, but they're not closed because they're being bad managers or being bad businesses and they don't know how to manage their cash. They're being closed due to a virus. So we will find a way to make sure that most of them can reopen and we can go back there again. And this is how it's going to happen. I don't know how it's going to happen concretely yet because it's a complex issue, but obviously the financial market is already working on that. And if you think it's the end of the world, think again, it's not. And if banks already announced those measures in Canada, I can assure you that they won't do that if they cannot do it or if they don't know if they're going to be backed by the government. They do that because they're sure. Because there's one thing I've learned after working for 13 years in the financial industry for banks, they don't do anything unless they're 100% sure. They are incredibly conservative and they kind of like sometimes for the worse, sometimes for the good, but they work hand to hand with the federal government. This is how it works in Canada. Now, just to finish on that point, lots of people are telling me, well, how come Bank of Montreal or National Bank have taken a huge beating compared to TD Bank and Royal, for example? Well, that comes all about trust and confidence. Basically, what the market looks at is, oh, you know what? If I have to put my $2, I'm going to go with the big go boys. So the two largest banks, Royal Bank, TD Banks, are likely less to get affected by this panic and this momentum. And on the other side, National Bank and Bank of Montreal are the two smallest players among the big six. I would not go outside of those 6 banks, honestly. I think that they will manage through it. Canadian Western Bank, Laurentian banks are at high risk right now. They were rated sell last year, so I'm not making any news here for all DSR members. You already know that. I've been telling you that for like more than a year, that you should sell both of them. But for the others, my trust remain confident. I hold shares of Royal Bank and National Bank. What a surprise. And I'm going to keep them. So tomorrow we're going to talk about what you should do. Should you go after all the falling knives, like companies that are getting beaten down so much, or should you better go after what we could call like overvalued stocks like Microsoft or Visa, or like safer picks that haven't taken a hit as others did? Because you have like companies that drop by 50% and others that drop by like 5 or 10% or 20%. So which type of companies that you should be looking at? This is what we're going to discuss tomorrow. In the meantime, this afternoon I have a private webinar with all my DSR members, so thank you for being there. It's going to be fun. And tomorrow I have a public webinar, free webinar for everybody else. So you can register down the link below, completely free. And you know what? I'm not going to pitch DSR for like half an hour and leave you with nothing. I'm going to spend an hour and a half with you guys, talking about the market, trying to help you out, answering your question. And yes, I'm going to offer you to join our DSR community because they're amazing. First, they like the level of questions I've received for today's webinar is incredibly good. Even like topics that I even didn't think about myself. So it will just be an opportunity for you to join a community of strong and well-experienced investors. And you know what we do at DSR right now? We stay invested, and this is what we do. So until then, stay tuned until next morning video is about whether you should go after falling knives or safe stocks, and we'll talk later. Cheers.